Okay. Thank you, Brandon. All right, we should be on YouTube too. Roger will be in just a minute. We're running a few minutes behind. Yep. Not yet. Not for me. Soon though. This is actually my cousin's business. I just got this hat, so I figured I'd wear it for him. He was a funny enough, he was a chicken farmer, and his taxidermy business got big enough that he just quit his job. He's doing it full time now. Yeah, no, not at all. Yeah, he just quit his job. It's full time now. That's weird. Taxidermy? Well, it's not like people's pets. Yeah. Yeah. Seated pad would be good. Lake City, Brandon. Morning Gourd, Vancouver. Oh, Roger's sending me something. Yep. Can you send a bid to the market? Can you send a bid to the market? They're not getting the memo. All right. Let's check the VIX. Oh, the VIX is spiking. Yep. Oh, thanks, Carlos. That's very nice.
All right.
Oh, jeez.
Hello, 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 and hello, everybody. I hope everybody's doing good. Everybody's doing great, actually. Let me just say hello to everybody, and we'll get started. I apologize that I was a few minutes late. I was looking for something to get you guys to give you guys some more information about earnings. I needed to get a scorecard to see where we're at, and I finally was able to get one. So now, Matt and I, um, we subscribed to a news feed called Trade Exchange. Let me share my screen real quick, and I'll show them. Hey, bullish bears, I warned you this morning that things don't look, that things are. So you see this? This is a trade exchange. It's called Trade Exchange, and it's a live news feed for by professional traders for professional traders. So if I see something really cool here, um, yeah, it's a bearish T-shirt. So if I see something really really cool here, I will make sure and post it in the Telegram channel so you guys have it. This is in real time. Covering up the bearish. Here you go. Bearish. Bearish. So good morning, Rabia. Hopefully I'm pronouncing your name right. Um, Carlos, how are you? Donut Cedar. Okay. Steve, Robert, Ken, Carlos. All right. So all right, we got folks here. Angie's in the house. So if I see something really interesting, I will post it up. But if you guys are seeking to become a professional trader, this is a really good thing to have because if something is happening in the world, it'll give you an update immediately and let you know that something in fact is happening.
And it's about a third of the price of Benzinga.
Yeah.
We had them both. They're they're pretty much the same,
Yeah, and Bazinga really focuses on small caps, and this doesn't.
and they're expensive.
Right, right. All right, so let me share my screen here, and we can get into the good stuff. It's can you post a link Trader Exchange?
I will.
We're not an affiliate. They have like a bunch of people. I'm not affiliated. We don't make any money from this. We're just trying it out, but so far it's really good because it focuses on just what you need to know, and it's on large caps.
Well, that's what keeps our opinion unbiased.
Bazinga was too focused on small caps. So just FYI. Okay, so let's talk a little bit about the broad market. I want to back up a few things. Now, as you can see here, I'm actually looking at the TLT right now. The TLT, ooh, the market's cooling off. Look at this. Fortunately, we literally have one position in the pit right now. That not much going on there. It's a pretty conservative one. Bond market. Bond market's breaking out. The bond market is going higher. This is the daily, this is the intraday. As you can see here, we're near the highs of the day. So in theory, the bond market isn't really putting pressure on stocks. Now, volatility was behaving itself till recently, but I want you to look at something. This is the daily. Notice something here. Volatility did not break the high from 2 days ago. That's really where we're at right now. Now, if it starts breaking this level, that's going to be cause for concern. But as of right now, it's not really doing that. So we could be. Is there any relationship between VIX and TLT? Not a direct relationship, but there's a very strong indirect relationship between bonds. The reason, okay, you always have to ask yourself, why is the stock market going down? And the stock market goes down usually because of a catalyst. So you got to ask yourself, okay, what is the major catalyst? What is the major catalyst right now that's causing the market to do what it is doing? Well, right now, the main key, the big key in the market, the big key is earnings and earnings, Fed data, and global turmoil. Okay, global turmoil on Friday. Here's how you got to look at the market. I'm sharing my screen. And Claire, I'm actually answering your question. So here's the SPY. Here's the daily on the SPY. This is over the weekend. This is Monday. Nothing materialized with global turmoil. Bonds are going higher right now, and it's got to be something relating to earnings. Okay, that's how you figure it out. So if it's relating to earnings, volatility and bonds will not have a huge relationship because volatility is based on the implied volatility of the stock market, whereas the bond market, it's on its own. With that said, if it's an interest rate related downside action on the stock market, the negative correlation will be very, very strong, Claire. I hope that makes sense. Okay. The negative correlation will be very, very strong. Now, I kind of went around that question about, so whether they have a relationship or not depends on what's driving the market at the moment. If Fed is driving the market at the moment, they'll have a very strong relationship. If earnings are driving the market right now, they're not going to have as big of a relationship. All right. That's what I wanted to say about that. Now, how do I feel about the overall market? Honestly, truthfully, I'm not bullish. I'm really not bullish at all, but I'm not bearish either. I'm very neutral right now on the market. As I said before, volatility in the last 3 days has not gotten up. The market is probing lows, but every time it probes lower, you get a nice big defensive bar. So this market looks like it wants to chop around. It doesn't want to go down. It doesn't want to go up or down. What's bothering me and concerning me, and don't get me wrong, there are a few stocks, and when I say a few, I mean a few stocks that are still holding up really well. But let me show you this. I wanted to show you this. Where was it? Where was it? Where was it? Go to my bar chart real quick.
See, all Alaskan airline flights are grounded right now.
Why? What happened?
They haven't released why.
Is that from a trader exchange?
Uh, yeah, I
Uh-huh.
saw it earlier.
So yeah, let me go here real quick. And I'll explain to you why. And I showed this morning. If you look at the QQQ, which is right here, if you look at the number of stocks trading above the 50-day moving average, which is a real strong major thing, look at where we're at right now. We're not up here. We're not down here. We're already down here. So it's not like there's like a huge, massive downside correction pressure that's going to take us down. I mean, we've seen that already in the last couple of weeks. We've seen the number of stocks decline substantially. You see that? So what we're doing right now is we're looking at the number of stocks in the S&P 500 that are trading below the 50-day moving average. And again, the number is only 23%. So it's quite a bit. Good, Cyrus. Good for you. Glad to hear that. In terms of the 200-day moving average, we really have a lot of stability. There's not much here that's out of whack. There really isn't a lot here that's out of whack. I mean, things are stable. The S&P 500, 65% of stocks. So to me, it looks like you have a good, strong foundation, but you're seeing that pullback and making the market in the short term very oversold. I mean, look at this. Except for energies, and energies are inverse to the stock market. We all know that. If you look at the energy sector, you'll see it's got 100%, 100%. But everything else, 27% for the entire index. Consumer discretionary, 17%. Defensive, that's consumer staples. But look at most of this. Excuse me. Most of this is in the crapper. So if the market was making all-time highs and this was all at 90 percentile, I would be saying, we really do have a while to go down if we start going down. But this to me looks like a market that's shaking around and wants to get back into equilibrium. It actually looks like a market that's in the short term a little bit overdone, a little oversold. It is in the short term. As evident by the fact when I was showing you the when I was showing you the when I was showing you the number of stocks making 20-week highs, there's like one stock. Number of stocks making 50-day highs, there's one stock. Stock making 20-day breakouts. Well, it says there's 18, but like 15 of them are inverse ETFs. It's pretty funny, right, Matt?
Yeah.
I mean, look, inverse, 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 inverse. Okay, here's one. That's an inverse Tesla, by the way, in case you're interested, TSLQ. So that's one. Still one. We're only at one. 2, 3, inverse, 4, inverse, inverse, inverse. I don't even know what the hell this is. 5. So we got five stocks making 20-day breakouts. Do you see where I'm going with this? So there's just not a lot of momentum to the upside. But at the same time, look at the number of stocks making 20-day breakdowns. 417. What about 90-day breakdowns? Let's take a look. Only 143. Not that many. The market has to tap out at about 450. Okay. and we're not seeing strong volume, and earnings are just getting started. So, and we're in the middle of the week, so I'm just not feeling it. Otherwise, I would have already went short in the pit, and I'm not. So, I think the market is looking for balance. I think the market is looking for equilibrium. I think the market is looking to, I think Monday and yesterday, the market was kind of moving. I think there was a lot more fear towards the bottom. And I think at this point, the market is just looking for directional bias and waiting for some fund action to come back in. I'm just not seeing it. Now that could change. For example, if the news starts getting, if the Fed data starts getting worse, if we have overnight action in the Middle East, if you know who comes out and says something stupid. But as far as the worst case scenario with the Middle East, we've already played out through it, and it just didn't materialize into anything. Also, there's not a lot of volume to the downside. The type of info you won't hear. No, you're not going to hear. You're not going to hear this kind of stuff. So again, just wanted to kind of show you internally, inside the cookie box, what's happening. You know, it's one thing when you're looking at from the outside. It's another thing when you kind of look inside. So I'm not seeing extended selling pressure just yet. I know I'd love to tell you that I am, but I'm just not seeing that extended selling pressure just yet. And by the way, when we make a new low like this, we tend to go up, consolidate for a few days, and then go down more, then consolidate and go down more. So I think that if this is the beginning of a short cycle, and I think we'll know within the next few days because VIX will break the high. I think we will have a little bit test of the area up here to sucker more weak hands in. Otherwise, it'll just look like a turnaround. Right. Right. Okay. So let's take a look. And by the way, I've been talking about the bear side of this market, and I've been talking about trading to the short side now in the last 24 hours. In the last 24 hours, we traded CRM to the 48 hours. We traded CRM to the short side, traded AMT to the short side. So we're starting to trade more to the short side. Okay. Yeah, you guys are really focused on chip stocks for some reason right now. Are you all in chip stocks or something? Inverse ETF is not an indicator. It's the same ETF. It's just on the opposite side. That's all it is. Good to know. Good to know. All right. So wanted to show you that. In terms of the technical picture, let me just. As far as the technicals, just simply looking at the technicals, let me see something here. All right. As far as the technicals are concerned, and I do want to mention the technicals. We look at the SPY. You could see that we're below. This is the intraday. And we're kind of sitting down here. We're going down, but again, the bars are not massive. You're not seeing huge candles like this. It's just kind of slow drifting. Keep your eye if you are looking at the SPY. Keep your eye on the Hakinashis. Once the Hakinashis pull one of this, see this right here, a flat bottom candle, that will signal that the tide is turning. Hakinashis are opposites. Hakinashis. I never recommended any of these tech stocks chip stocks you guys are talking about. SMCI. I don't know what you guys are doing. I never told you to buy Nvidia. I don't know what you guys are doing. What you guys are doing. Anyways, all right. So it's a steady slow, waiting for a bar that looks like this. This is a Hakinashi reversal bar right here. You just want to put this on your computer and just sit there and watch it. And when you see a bar like that, finish, not start, finish. The bar has to finish. That means we're turning tides. Right now, it's just nothing yet, but we are kind of like in the lunch hour right now and kind of sifting around here. On a daily chart, which I will pull up right here. Oops. We are below We're below the 50-day moving average. The 100-day is around here. I keep putting it on and it keeps coming off for some reason. I better save it next time. And we have the 200-day moving average all the way down here. I believe even if we were to go further down, I think we would come up a little bit for a reprieve or have a couple of inside days before going down, which would reduce volatility. So if you are in a long position, you will have probably some opportunities to get out and reverse before going down. Yeah, John, an inverse ETF is just the opposite. So if you have a SPY going up, the inverse SPY would be going down. For every dollar it goes up, the other one would go down a dollar. Yeah, look at volume on the SPY. It's right here. It's 27 million right now. The average volume has been about 80, and we're more than halfway done through the day. So the volume is not heavy now. And notice yesterday we broke the low. We broke the low again, but look at VXX. See, it's not going higher. If I tell you something, it's not because I have this premonition. It's because I'm seeing something happening. So, and I'll be able to point it out. I don't just do things because, well, I feel like. I'm not that kind of guy. So I have very strong feelings for what I'm saying. Volatility is not going higher, and we just broke down on the SPY. And at the same time, the bond market's making a swing high for the day. So nothing here. So we know the Fed is not driving this, right? And we know, what about energy prices? Energy prices? Anything with energy prices? No, energy prices are going down. Energy prices are inverse to the stock market. Remember, we saw 100% of stocks trading above energy stocks trading above the 50-day moving average, and 30% for the S&P 500. Thank you, John. So my point here is don't care. You guys, stop telling me what trades I should be recommending you. So again, back to what I was trying to say. I'm not seeing the only thing that I'm seeing that is possibly earnings. It's earnings related, and if that's the case, that's not good. Claire says, so is the VIX subject to earnings? I'm confused why it's not making a higher high. You're asking me a question, Claire. You're asking me good questions, but it would take me. I've already answered your question. You didn't understand it. If you want me to give you a better answer, send me an email. The VIX and the S&P is based on the fear in the market. The VIX is an independent asset, and it's not feeling the fear that the market is exhibiting right now. And if it's not exhibiting the fear that's in the market, that means traders who have at-the-money options on the S&P 500 are not fearful of this downside move. And usually big traders who have options on the S&P 500 have a really good sense for what's going on because they're pushing the market. Now, if you didn't understand what I just said, I answered your question the second time. Now, if you don't understand what I just said, rewind the tape, go to my YouTube channel, rewind the tape, and listen to it about 10 times. And you will understand because I answered your question. This is a fear indicator, okay? This is a fear indicator. The VIX is comprised of S&P 500 at-the-money options. That's what powers the VIX. So if the at-the-money options implied volatility is not blowing up, that means the market is not nearly as fearful as it is exhibiting. Now, does that mean all is good in the world and rainbows and crickets and fairies are ready to come out and we're going to make new hot? No. What it simply means is that whatever we're seeing driving the S&P is not being exhibited via fear. It doesn't mean there's something not unknown. It doesn't mean there's something unforeseeable that we're not aware of. It doesn't mean there's something we're not discounting. All I'm saying is that fear is not driving this market to go lower right now. It's not emotions. There's only two emotions, fear and greed, Kirk. Okay. Oh, that's nice. All right. All right. Very nice. All right. Perfect. 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 Yeah, I like a good shakeout too because it tells us which stocks are really strong which is why I went long that stock that I'm not going to talk about in the pit today. And it's held up remarkably well. I mean, remarkably well. Yeah. Uh, Pink Sparkles, because you have such a pretty name, I will, but after I'm done with my list is not very long today. So, how do I feel about the market? Overall, I'm not feeling great, but I'm not feeling very bearish. I'm feeling neutral. I'm in a neutral mood today. You know, when that day when you don't know what to wear, you wear layers of clothes because it may be warm, it may be like every day in California, in Southern California. Uh, but 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 seriously, you need to be flexible right now. You have to be open-minded. You can't just buy any stock and expect the market to rescue you anymore. What do I always say? Market first, market first, market first. You know, when you buy a house, you know, what's the three most important things? Location, location, location. What's the three most important things in trading? Market, market, market. I don't care what stock you're in. If the market's going to go down, it's going to take your stock with you eventually, sooner or later. So we got to make sure the market is not doing any hanky panky. And even if the market's going down, we want to know how it got there. We want to know the quality of the move. Okay. Ram and whoever, folks, I don't run this based on your schedule. I run this based on my schedule. I'm not going to answer any questions about anything you guys are asking me unless it's completely important and relevant to what I am saying right now. Okay? Yeah, you know what? Hell with it. I am going to turn this questions off. I'm going to just turn this off. Matt, you ask questions. I'm going to turn this off. So let's now go through our analysis. Hmm. Okay, let's uh, let's cover this. Short side. We're going to do short side first. Pfizer. Oh, I like how it's hitting the view up intraday right now. So it's breaking down. Matt, keep your eye on the chat in case somebody has a question, okay?
Yep.
I would put a stop right around the 15-day EMA, right around 2640-ish level. The one stock I keep telling you about is Tesla, but nobody keeps listening to me. That's the problem. You don't know how many people send me emails about Tesla. I should start a Tesla service, Matt. You know?
Yeah.
Seriously. I don't know what it is about Tesla. All right, May 3rd expiration. We're going to go to 80 Delta, 26 put for Pfizer. Next one, USB. Nope, near the 200-day moving average. No go for this one. Oh, yeah, broke the 200-day moving average. Broke the 200-day moving. Stop loss would be right here at 116. 30 days out, 75 Delta, 115 put. Continue here. Stag. Thing looks like it's got more to go. Options are bad, so we're not going to do this one. Now this one looks like it's just getting ready to drop or getting ready to build a base. I would feel more comfortable if it broke out of its range. Okay. All right. Okay. So let's just hold off on this one. Let's see if it breaks down or holds here. Oh yeah. Oh, yes, 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 yes. Oh, I'm getting excited about this one. Right here, about 41.70 for your stop. We would go to 0.70 delta right here, 40 put. 40 put right there. Broke the 200-day moving average. Clean break, Matt. Look at that. Clean break, right? 200-day moving average. Put your stop right above it, about 50 and a half. 30 days out. Oh, no option spreads. Forget it. Forget it. Cracker Barrel. Oh, I don't know what it is with my wife. She loves Cracker Barrel. Every time we're on a trip, she wants to go to Cracker Barrel. My daughter and I can't stand it, but she loves it. $63 would be your stop. Got some directional selling pressure. Oh, I just can't get a break today. Right here, 0.80 delta. Oh, nope. Right here, 75. The spreads are just too wide. You're gonna have to work the order or take a pass on Cracker Barrel. I think I might have missed the first one, Logitech. Oh, I'll check it out. Eh. All right. Um, Logitech. Oy, oy, oy. This looks bad. Stop loss right here above this gap at about 84. About 30 days out. About 80 delta. 85 put. Right there. Right there. Continue this thing. Oh, could this be a little pivot to the shakeout right here? We'll find out soon enough. All right. So those are our shorts. Those are our shorts. Pretty boring. And there's a potential going on Caterpillar right here, which can go up to the 50-day moving average. So one more. Your stop loss would be right here, 366.50. I forgot this is my favorite one. I should have started with this one. We'll go 16 days out till May 3rd, about 72 delta. It'll put you at 365. You're going to pay, and you're going to pay good here. But you can offset that with the 350. All right. So you're buying the 365 and you're selling the 350. That's what Clyde said about Caterpillar exactly. It's his trade. Remember my rule. If we get it right, I take full credit. If we get it wrong, you got to blame Clyde. Right, Matt?
Right.
Yeah, Clyde is the troublemaker around here. These are all puts. So far, we're looking at puts. We haven't got to calls yet. Yeah, Clyde is a good assistant. All right, now let's do the long side. Okay, now we'll switch to calls. All right, WPM. I like this stock. It's a metal stock. Got about 16 days to go. 79 delta. 50 call. That's a call, just FYI. So everybody knows this is a call we're talking about, okay? We would put a stop right below this pivot, right here, somewhere in the mid 49s, upper 49s, right here, a little bit. And we would go 16 days out. And again, right here, 50 call. All right, next one. Gave you this one this morning, and I still like it. I think once the stock market cools off a little bit, I think it's going to start. You know what? I would skip this for today because it really went down. You know, that could be a big thing. The energy market could be it, but no, it's the tech. Tech is the Nasdaq is down 200 points, and wow, and our position is down less than $1.40. I love it. That's fantastic. That's relative strength, folks. That's good. Wait for this to cool off. Kirk, why would you do that? Now, I'm okay. That's what I'm going to talk to you guys about. All right. Kirk, don't average down into trades. Losers average losers. Have you ever heard that before, Kirk? Have you ever heard that saying before? I didn't come up with it. This guy did. Absolutely, Adam. No, well, okay. You see this guy right here, Kirk? Do you know who he is? See, losers average losers. That's Paul Tudor Jones. He's a billionaire. He made his money the old-fashioned way, trading. He's one of the market wizards. Now, I've worked with two market wizards. I never worked with this guy. See what it has in big. How important is it, do you think, for him to put this on his wall in big letters? Losers average losers. He must do this so you guys don't follow it, right? So he doesn't make that mistake. You know why? Yeah, that's the dumbest thing you could be doing. Don't losers average losers. Oh, I got this one wrong. Oh, I'm going to go down again. Well, if you got it wrong, why not? Why do you have to buy it 2 or 3 times? Why can't you just buy it once?
Very counterintuitive to investing. You really need to separate them because investing, you have dollar cost averaging. That's the best way to invest in the long term. Don't try to gauge the entry, just keep buying. But in trading, total opposite.
Losers average losers. All right. In big letters. Well, he's a pretty smart guy. He made $1 billion, multiple billions of dollars on his own. Yeah, of course he knows his stuff. Don't mess around. Okay. So don't do that. Don't do that. And if you ever trade with somebody who averages down, that means you ask them, well, why didn't you just wait till the price came down here if you were so smart? I mean, why don't we just keep averaging down every one of our trades and we'll never have a loser, right? No sense. No sense at all. All right. That ain't my name, Robert. Centex. Fundamentally different game. Trying to catch a falling knife. Bingo. You guys are absolutely right. So I like the stock. I like the stock a lot. Stop loss would be at the 15-day EMA. I didn't mean to get carried away, but it was pretty important. Don't do that. Don't do that. You're going to learn it. You're going to learn it either the easy way or the hard way, but you're going to learn it. You will learn that lesson. Just learn it the easy way. Have me teach it to you. Instead of, have you ever seen me average down a trade? That's a good question. Have you ever seen me average into a trade? Ever? Ever? Okay. Do you think there's something that I'm missing here? Never. Ken's been with me for 7 years, 6, I don't know. God knows how many years. I never do. I never average into a trade. I mean, never. That's not how you'd play the game. That will get you fired fast from an institutional desk. What are you doing, man? Right here, 16 call. Close to 10 years. Have you once seen me average into a trade, Ken? Average once? Not once. So either I know what I'm talking about or I have no idea what I'm talking about. But it's probably not somewhere in between, right? All right, all right. Let's continue. I'm having too much fun with you guys. Um, one more. BCTR right here. Swing high today. You would go right below this pivot. I don't know if this has any liquidity though. 30 days. 96. No, no. You're not going to be able to get these off. And I'm going to tell you something. Even though there was 100 contracts here, 1,000, you still wouldn't be able to get them off because it's the spreads are the market maker just there's nothing there. There's nothing there. Nothing. Um. All right, Matt, do seasonality, and then we'll have our little our guest come up.
Sure thing.
Yeah. I don't do that. Yeah, VLTO was a pass. Go ahead, Matt.
Number one. Okay. There we are.
Remember, guys, we have a 20-year bond auction at 1 p.m. Okay.
And they've actually been relevant lately.
Yeah, yeah, they have.
Typically, you would never notice them, but we've had quite a few moves
Very true.
off of them the last like month. All right, here is the long side. Let me go over this real quick. I had I had one person send me an email yesterday, but I've had a couple people ask me about this in the past. So let me just briefly go over this while I have a minute. He said, um, and I won't say his name here unless he outs himself. You're going through all of these numbers really fast and you're making picks, but how are you distinguishing between what's good and what's bad? Uh, because you might notice some contradiction if you're just going on the highest number. So let me explain. Seasonality is the edge is a pattern. It's an exact pattern by the time of day. So that means accuracy is extremely important. There's no accuracy, that's bad. However, if there's high accuracy, that would be this column, it does not necessarily mean that we would want to take the trade because if the profit factor is low, that's also not good. So let me give you an extreme example. There is one. Oh, this is the decent one right here. Okay, so Pan W. You see, you look at this. All right, it's got an 88% win rate. That's awesome. But look right here, profit factor 1.04. So what that means is that we only made 4 pennies for every dollar that we risked while trading this. So even though it's accurate, you're barely making any money. And actually, if you look at a distribution of that, you're probably, when you take one trade, probably more likely to find the loser than the winner, unless it's just barely moving, but more often than not. And then the last one is number of trades. Because it's seasonality and we're looking for seasonal patterns, the more times the pattern has occurred or that we can test the pattern, the higher confidence we can have. So something with 8 trades, 8 data points is not going to be as reliable as something with 23 trades. So this is going back all the way to 1990. If it's done the same thing in the last 34 years, that's a lot more noteworthy than, let's say, right here from 2012. One is going to have a lot more weight than the other. So I hope that clears it up. You need accuracy because that's a minimum standard for this, but we also need a high profit factor. If it has a high profit factor, so this is the last thing. Accuracy is non-negotiable. Profit factor varies, is going to gauge our interest in the phenomena. If it has a high profit factor but a low accuracy, if it was a trading algorithm, that would be fine. But in this case, because it's seasonality and we're looking for seasonal patterns, the accuracy is not there, then we don't care how high the profit factor is on seasonality only, because the whole edge is the day of the year. If it doesn't have a day of the year, then that's just, if it got lucky a couple times, that's just randomness. So you throw it out. Okay, let's go to today's seasonality now. I keep getting that question a bunch, so I just wanted to take a couple minutes and clear it up. All right, so seasonality on the long side for today. Financials looks good. Energy looks good. Does not look good on the chart though. XLV looks good. These numbers are dwindling a little bit from yesterday, so we should see a much lower total number. 195. So we've been flirting 250 to 300. We're going down even further now, 195. Looks like the seasonal trend uh, for now is wearing off, but we went to 10-day hold. I do remember yesterday that was really strong to the long side. And that number is 302, 60%. So probably a little bit more bullish than bearish, but not super strong either way. Let's look at the short side. For your sectors, there's nothing except for real estate, and that's been hanging around. We've seen real estate short. I mean, they start to blend together, but at least 2 weeks. All right. The short side number is even smaller, 85. Just not a high time of seasonality for the market. Let's look at what we have going on here. Trend wise for your sectors, there is quite a bit of a jumble. Let's actually do this. Let's go down the list by our sectors. Basic materials is pretty weak. Communication, better, but not awesome. Consumer discretionary or consumer cyclical is actually probably one of your stronger ones. In the way I'm judging that is I'm sorting them by the sector. So we're looking at the number of stocks in it, and we're looking at basically just the distribution. So are do a quarter of them look good? Do a half of them look good? Uh, like energy looks very strong. More than half or above 70%. That's really good. Uh, Financials also don't look too bad. Are we still having a special guest today, Roger?
Yes.
Okay.
Let me see where
I'm just kind of hanging around until then. We could. We could definitely have a shakeup. Could also have a huge reversal. I would spoil the surprise if I said it. Oh, we'll show you one thing since seasonality is kind of moot today on energy. A lot of people ask me about energy. Let me pull up crude real quick. So you kind of had a what do you call it, like a bullish pennant forming on the daily, and really this channel too. And we definitely, either way, we have broken outside of this. This is an extreme move outside of this range. I mean, it's
Yeah.
a rough range, but and then also pennant, wedge, whatever you want to call this thing. We're clearly outside of the normal price action. Uh, I would, barring global political news, guessing maybe we're going to start testing the 80s, see if they find support there. That actually kind of really lines up with the 50-day moving average too. So I don't know.
Next level on the SPY is the 100-day moving average, which is 491.
This is crude.
Oh, I see. I see.
Yeah, we're talking about energy, how it's broken out of it's kind of well, it's bullish trending, and then it looked like it was forming a
Can you let Graham? Can you give Graham a panel so he can give him
I
the
sure
power?
can.
Yes.
Let me find him.
Had a couple of hundred people in here. Yeah. And that's the other thing, folks. Notice energy prices. See how energy prices are not rising right now and gold prices are not rising. So to me, I'm going to tell you what I personally think. I personally think that there he is. I personally think this is all driven by reaction to earnings. And typically, earnings tend to overreact and to be more bouncy. Fed data. See, you can't really argue about Fed data. If they say red, you got to kind of, market has to shift there. If it's green, the market has to shift there. Middle East, what are you going to say? It's really not happening. It's really not happening. You can't do that. So if it's not interest rates that are driving this, if it's not volatility that's driving this, then more likely than not, this is reaction to earnings. And you know how stocks, they go down 15 points, they go up 10 points when they're really volatile. Uh, so I think that's what we're seeing with the market, because I'm not seeing any. I have my news on right now and I'm looking at bonds and I'm not seeing anything driving this right now. Now, obviously, I've been here the last 45 minutes and I'll take a look, but I'm not seeing anything. Hey, we got our special guest
Hey,
here. How are you?
oh, doing good. Sorry about the confusion
I can
there.
hear him. Oh,
Can you hear me now?
yes.
Yeah.
Now I can hear you perfectly.
Oh, cool. Yeah, Roger, you've been calling it this whole time. I just saw that there's now a 1% chance that they're pricing in a rate hike this year from the Fed. So boy, oh boy, have they totally flipped their script.
1%.
That's right. It's better than zero. Or bigger
Well,
than zero. I don't know if I should say better, but
the
bigger.
kid may not be getting that bike, you
Cyrus,
know?
it is ongoing monkey business in the market today. I tell you what, I posted in my Telegram this morning at the open. I know that you like to wait till 10 a.m. to really get that solidification, but the open, everything was looking really good for me. I was like, oh, this is awesome. And then there goes the market.
Yeah, that's why I wait till 10 a.m. And
I
that's why I
like
don't
it.
do anything till 10 a.m. because the stock market likes to have a lot of monkey business. But I'll tell you, usually I go with the trend.
Hmm.
Today's the first time that I'm looking at the market in 4 months, maybe, that I'm not agreeing with what I'm seeing. And that doesn't happen very often. The reason I'm not agreeing with what I'm seeing is I'm not seeing, uh, usually when you see this and it's caused by data, you see you see energy markets rise,
Hmm.
you see gold prices rise, you see volatility spiking. Volatility is still at that, or at least it was half an hour ago, at the level where it was 2 days ago. And the bond market was making new highs, not new lows. So m- what I'm thinking is this is just a reaction to earnings, and if it's a reaction to earnings, then it's just heightened volatility and not
Hmm.
much more than that.
Hmm.
Um, but yeah, that's kind of where I'm at right now with that. So why don't you tell us, what
Yep.
do you guys
Well,
go
for
what do
sure.
you have going on today at 1 p.m.?
Well, I'll tell you what, while the markets are kind of pitter-pattering around this week and giving us a hard time, there's something going on behind the scenes with Bitcoin. We've obviously talked about Bitcoin a lot this year, but this Friday, actually, Roger, is the fourth halving cycle. It kicks off now. It's a lot to cover there. I'm gonna talk about it here at 1 p.m. Thanks, Roger, for posting that link. But guys, that happens this Friday. It happens once every 4 years. Each time it's happened in the past, Bitcoin has surged at least 500% over the next 2 years. Now we're going to talk about the exact price projections I have on Bitcoin right now, but that happens this Friday. Right now, Bitcoin, like the rest of the markets, playing or trading at a little bit of a discount. So honestly, I was telling folks in Telegram, this is the perfect time to be looking at Bitcoin because you get it about 10-15% off from where it was, and you can still do it before the halving kicks off on Friday. So we're going to talk about that here in just 5 minutes from now.
Beautiful. All right, folks, I'm going to join you in there, and we'll hang out and we'll have a good time there, folks. Head there right now. Don't delay. Don't procrastinate. The link is there. And one thing about cryptos, really cool thing about cryptos is that um, they are not correlated to the stock market directly. They have a so there's a level of diversification there that you could take advantage of, and that will help you. Uh, that will help you in diversifying your portfolio. And I'm going to tell you something. You may not appreciate it right now, but when you start growing your portfolio, nothing is better than the diversification. because it will save your butt. It will save your butt. It's very nice to have 40, 30, 20% of your portfolio doing the opposite when something is doing really, really bad, or doing really, really good when something's good. It's nice to have that little offset. It makes you feel psychologically better. It's like the only free lunch Wall Street will give you is diversification. All right, remember that. Remember that. And,
Love it.
and if I was a little harsh about that Paul Tudor Jones, I was showing them the picture of Paul Tudor Jones. This is losers, average losers. Somebody asked me about averaging down, and I said, I've never once averaged I never once averaged a trade since I've been working here publicly doing this, and I haven't done that in 30 years. Don't average into trades. If you think about it, why are you averaging into a trade? Why not just wait? If it's such a great idea to enter right now, well, then why did you enter previously? You see what I mean?
Yeah, stick with your
It's
rules.
like
Stick with your
it's
plan.
right. It's like if this is your initial idea, then why didn't you wait for this initial idea? Then obviously, basically, every time you're averaging in, you're saying, "Oh, I was wrong here. I was wrong here. I was wrong here." Well, I mean, just take it out. If you're
Mhm.
wrong, Anyway, my 5 cents. All right, folks. We will see you in 4 minutes in that room. I'll be logging in shortly, and we'll talk soon.
Awesome. Thank you guys. See you there.
All right. Bye, guys.